Hello, today we are going to solve May 2023 question number 1. Prepare the statement of financial position at 30th April 2023. So let's start preparing that. First is the non-current assets. The non-current assets are at 60,000. Okay, so let's write that. So it is at 60,000, 60,000, and then fridges and equipments. So here we have to make adjustments. Okay, here we are making adjustments because there has been some buying and selling. 28,000, and the cost of the equipment that was sold was 6,500 and something was bought for 12,000. So the total value will become 33,500. Okay, so the cost of the fridges and equipment will be around non-current assets 33,500. Then fixtures and fittings, they would be, there is no changes, so its cost is 22,500. Then we have the accumulated depreciation. So let's see what are the changes that has happened. Accumulated depreciation, the leasehold was 12,000 plus this year's accumulated depreciation we had already calculated in the previous one. For the leasehold it was 3,000, so 12,000 plus 3,000, this will become 15,000. Okay, so the accumulated depreciation is going to be around 15,000. Then we have fridges and equipment. So here we have, they have sold. Okay, accumulated depreciation, it has to be removed. So 26,200 minus 5,200, and this year's depreciation has been calculated in the previous thing. Okay, it was around 2,500. So 26,200 minus 5,200 plus 2,500. So when you adjust, okay, the value is going to be 23,500. So the accumulated depreciation for the fridges is going to be equal to 23,500. Okay, you remove the disposal accumulated depreciation and add this year's this year's depreciation which was calculated. Then for the fixtures and fittings, it was also calculated in the previous thing, okay, in the previous question. So it was around 2250. So you add 7,500 plus 2,250, that will be equal to 9,750. So let's put that value here. So 9,750. So now let's calculate the carrying value. 60,000 minus 15,000, the carrying value is going to be 45,000. Then 33,500 minus 23,500, this carrying value is going to be around 10,000. Then 22,500 minus 9,750, okay, so this value is going to be around 67,750. Now let's add up everything. Okay, let's add the total carrying values and the cost. Okay, so 60 plus 33,500 plus 22,500, that's value is going to be equal to 116,000, and accumulated depreciations, the total adds up to 15,000 plus 23,500 plus 9,750, that is 48,250. Then we have the carrying value. Let's calculate the total carrying value, okay, of the non-current assets. 45,000 plus 10,000 plus fixtures and fittings. Here the fixtures and fittings will be at 12,750. Okay, sorry, 22,500 minus 9,750, it will be 12,750. So the total value is going to be 6,750. Okay, when you add up. Now let's calculate the current assets. Now the current assets are going to be inventory. So that is closing inventory we have to take. So let's add up the closing inventory. So 1500 plus 29,500, that is going to be equal to 31,000. So that is 31,000. Then we have the trade receivables. Trade receivables were at 55,600. So let's write that. So 55,600. Then we have the allowance for irrecoverable debt, that was 5,000 and there was no adjustment. So just less 5,000 we have to do. So when we do 55,600 minus 5,000, you get the value of around 50,600. Okay. So you can add all of this. Then electricity, other receivables. So electricity, what had happened was current expenses had got prepaid. So prepaid expenses become current assets, and owed expense will become current liability. So 130 had become, okay, prepaid. So that is the current asset. So it is current asset is 130 pounds. Then we have cash and bank. In the bank, certain transactions had happened. So let's look at that. So already we can see that the bank balance is debit, which means it's an asset balance. Okay. So now after this, uh, there is like there has been, okay, there has been certain transactions through the bank. For here, the fridges and equipments were sold, so it was sold at the carrying value, which means 6,500 minus 5,200, that is equal to 1,300 would have come into the bank. So we let's add this amount, okay, to the bank, 19,400 plus 1,300, and this equipment was bought by play through the check. So 12,000 has to be subtracted. Okay. So 12,000 subtracted. So you will get the value to be equal to 19,000. Okay. So it is equal to 19,400. Okay. 19,400 plus 1,300 minus 12,000. So this is equal to 8,700. Okay. 8,700 will be remaining in the bank and it becomes a current asset. So 878700. Now the total asset, okay, now first let's add up this one. So the value is going to be 31,000 plus 5,600 plus 130 plus 8,700. So that value comes up to 90,430. Now when we add 67,750 plus 90,430, so we will get the total asset value. So let's calculate the total asset value. It is 158,180. Okay, let's add up this. So this comes up to this much total assets. Now let's see the capital. Capital was around 70,000. There was no adjustments to this. So let's put 70,000. Then profit for the year we had already calculated in the previous question. So 12,630 plus 1,170, that is 13,800. So let's write 13,800. So the profit for the year had become 13,800. Now the drawings was 10,500. So you have to less the drawings. So let's subtract 10,500 drawings, and then let's calculate this value. So this will be 73,300. So this value is going to be 73,300. Okay. Then we have, so if we add 70,000 and plus 13,800, we will get around 83,800, and then you can subtract 10,500 from this to get the capital plus profit less drawings. Okay. Now next, non-current liabilities. So there was 10% bank loan, so that was around 40,000. Okay, it was already there. So let's put that it is at 40,000. And then current liabilities, the trade payables was at 41,700. So here also there was no adjustments. So 41,700. And then we had other payables. So what had happened was bank loan interest, which we had calculated in the previous answer also when we were preparing profit and loss. We saw that the actual payment had to be 3,000. So it had become owed expense, so which becomes a liability. Okay, the owed expense, so of 800 pounds. So that is acting as a liability here. So 800. Then advertising was also owed, and it was around 2,100. Again a owed expense, it is 2,100. And okay, and then there was a water bill was also owing, this expense was also owing, so it had also become current liability. So that is why you are going to put it as 280. Now let's add up all of this. 40,000 plus, okay, 40,000 plus plus, so this is non-current liabilities. Okay, so 41,700 plus 800 plus 2,100 plus 280. So this is going to give me 44, okay, 44,880. So 44,880. Now let's add up the total capital and liabilities. So that's going to be equal to, so 73,300 plus 40,000 plus 44,880 should be equal to 158,180. So now we can see that the total assets and my total capital and liabilities have got balanced.